Welcome to the Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. Whether you're watching us live on YouTube at TradeEZ or listening on your favorite podcast platform, we've got you covered. Subscribe, join the community, and get ready to dive into real talk and real market insights. Let's get started.
Hi everyone, I'm Stephen Kalayjian and welcome to the Bull, the Bear, and the Ugly. Wow, today was it ugly. And everything got absolutely kabooshed across the markets here. Well, we all know that the tariffs news are really what's really driving this. And then President Trump was asked yesterday about whether or not the economy might go into recession. He said, it's just what we may have to do in order to bring back all the jobs and the companies and the manufacturing into the United States. Markets didn't like that word recession at all. We had the S&Ps at one point down 180 points. S&P futures in the last hour from 3 o'clock to 4 o'clock, the S&Ps were trading 55.71 and rallied from a deep oversold condition. They rallied 70 points on the S&P. The NASDAQ, which was trading around the 19,000, like 280, ricocheted up about almost 100, more than 200 in a matter of literally about 40 minutes. What are we looking for here? Well, the markets are deeply oversold here. I think as we push up, you're going to see the markets have significant overhead resistance. We're going to look for some push up here in the next several days here. I mean, you see Tesla down 40. These names are getting decimated. You have good names like Avago. Avago is a great name. The earnings are out, so any big push down there. PLTR, any push down below the 75 level. But we saw some unbelievable moves here today. Volatility is here. It's absolutely insane. You blink and, I was buying spiders near the lows and I kicked them out a little too early, but boom, and they ran another 40 points on the 4 points on the spiders. The volatility is here. Meta was trading like for 587, 588 this morning, and then ran about 15. So the moves here are really unbelievable. We got Bitcoin below 80,000, Coinbase making new lows here, MSTR. It's just a wild day. Do I think this is going to end? No. I think basically what we're seeing here is obviously a lot of volatility. Markets are moving. These are great times for traders, especially day traders, people that want big moves in the market. And we're able to see these patterns. These patterns are unbelievable, so perfectly, so crisp, and so clear. So let me show you. I have so much to show you. So let me get right to it here. All right. First of all, you can see this is the move from early, from 315, 51, 55, 71 and a half. And you can see this big move up here. We caught a nice short and then they dropped about, we caught a nice long here. I was out like right into the 10 bar and right here. And I didn't really think they were going to run, another 33 points on the S&P. Ultimately got up here. They dropped. I said, look to cover shorts. Another great long pattern on the buy divergence pushed them up. But if you see here on the S&Ps on the daily, when the S&Ps were trading the 55.71, we're at 50, we were over 330 points from the 10 bar weighted moving average. Now, this is not a great pattern here. You got a ton of overhead resistance here. All right. Even if we do get some type of a push up, it's going to be short lived. Maybe you get this a race down. Maybe you rally 150, 200 points on the S&P. And that might even be a lot. Maybe back up to the 57.50, alleviate this by get this to like 150. And then ultimately, I think we're going to drop here. Okay. I mean, when you start seeing stocks like Tesla, look at Tesla here. $79 from the 10 bar weighted moving average. All right. Deeply oversold here. Even if you got a bounce up in Tesla, 20, 15, 20, 25 points, you still have this rising ADX. Look at this negative MACD. Tesla's going to be in trouble here. This was a great pattern in Tesla on the daily. Right after the daily reversed to sell, the 367.70, 367.34, and you can see the drop of about 140 points here in Tesla. Let's look at stocks like, first of all, look at the spiders today. All right. So the spiders today on the 5-minute time frames, all right, we're making new lows here. And every time they made new lows on deep oversold conditions, you can see the MACDs didn't confirm. Even here, when you push down, the MACDs didn't confirm for this big push up. This pattern here is called the triple Lindy. It's a buy divergence in a negative trend, meaning the fact that you can see the indicator 3 is turned up. The 15, 30, and 60-minute time frames are in sell mode. It pushed down right here, and you can see the run up here of about $2.50 on the spiders, which is 25 points on the S&P. Monster patterns here, but I want to show you early in the morning. Let's go back and look here. All right, when we got this push down this morning here, you can see the rising ADX here on the 5 and the 15. This bounce here was the perfect short at 945. When you see a rising ADX, negative MACD here, negative MACD here on the 60, negative MACD on the 30, right? Look at a rising ADX here on the 30-minute. You have nowhere to go here. And then the 15-minute time frame, you can see the gap down right here, the negative MACD. All three ADXs on the 15, the 30, and the 60-minute time frames were rising with big selling pressure. That first push up on the 5-minute time frame was a monster short. And then when you see here around the 11:45 time, this is a monster short. Look at this negative MACD. It's the width of the Atlantic Ocean. The right ADX is rising, which means the trend is in place on the 15, the 30, and the 60-minute. Look at the big selling pressure right here. The 15-minute time frame was getting somewhat overbought. And you can see the push up here, 579.14. You blinked, it dropped 3, and it just continued to drop even more. Monster short here on the 11:45. Everything set up at 11:45. Nvidia, Avago, the Qs, the spiders, Coinbase. I'm going to show you how these patterns, everything aligned at the exact same time. If you look at the SQQQs or the STSs, the inverses, they were calling for long. So everything confirmed for that monster short right there at 11:45. So with that, we caught an unbelievable pattern on the 15-minute time frame, and it really had a significant move down. I think the S&P futures on that right there, if you look at the Qs, let's look at the spiders on that pattern as well. You can see here the spiders were trading the 566.62, and the S&Ps dropped just on the next bar 30 points on the S&P futures overall. And I want to show you one of the best patterns of the day here. I'm looking at the S&P futures. When the S&P futures reversed to sell right here on the 5-minute time frame at 12:05, the 5-minute time frame ended up correlating not only with the 15-minute, but also correlated with the spiders on the 5-minute time frame. Remember, during the U.S. session, it's really important. If you're going to trade the futures markets, you got to look at the underlying ETFs, right? That's what my research has shown me. That's what I teach everybody. When the 5-minute time frame, as I showed you, reversed to sell, you look to short the first bounce, all right, on the 5-minute, and this is exactly what happened here. This push up right here was a push up on the 3-minute, but then the push up was on the 5-minute, 5.567 on the S&P futures. Just on the next bar alone, you can see the drop of about 25 points on the S&P. And then you just take all the bounces on the 5-minute time frame, 56.46. Okay, here's another one. Here's another one at the around the 220 time period. Trust me, when the S&Ps were trading the 56.31, the oscillator was around the 60, about the 70, 75, 80 level. And then we just continually dropped. At this point right here, we were 35 points from the 10-bar moving average. That's why I knew the market was going to rally here. All right. And again, what's really important here is when you're trading the markets, all right, to be able to identify these patterns. If you look at the SDSs, you can see the big buying trend here, the positive MACD. So this was the pullback I was referring to at 1145. Oversold into the positive MACD, rising ADX on the 15, 30, and hourly time periods. Look at the big buying pressure. Look at all the pullbacks. All these pullbacks were shorts on the S&P. Here's another one, the 125, beautiful, right? You can see this. And then at the end of the day, this is when I knew that when we were this far from the 10 bar, especially when the S&Ps were over 35 points from the 10 bar moving average, I knew we were going to get a very, very sharp rally. So again, using the underlying ETFs when you're trading with the market, okay. Also, you're able to look at the reverse ETFs, the SDSs, look at the SQQQs as well. Beautiful patterns on this pullback right here. Everything lined up, 1145. You can see my cursor right here. Now the SQQQs rallied from 37.14 to 38, but that was almost a $3.5 drop on the Qs, even though this was really like a 90-cent move here. All right. Now, also, let's look at Coinbase here. Look at Coinbase. This is an absolute Picasso. When Coinbase reversed to sell at 945, it reversed to sell, and Coinbase reversed to sell also on the 60-minute time frame right here. So when Coinbase reversed to sell this morning at 10:30, look at the negative MACD, the rising ADX on the 15, the 30, and the here's the 15. You can see the 15. Look at this pattern. This is the first bounce on the 15-minute time frame after the 60-minute time frame reversed to sell. So the 60 reversed to sell at 9:45. The 15 reversed to sell. It correlated with the 30. Then at 10:30, the 60-minute time frame correlated with the 30 and the 15. Lights out. Over OVA. You're short the first bounce on the 5 and the second bounce on the 15. And that pattern right there, never look back. This is a absolute Picasso. The guy who bought Coinbase at 198.87, he jumped 1, 2, 3, 4, 5, 6, 7 bars. It dropped north of $12. This is an absolute Picasso. When the 60-minute time frame reversed to sell, correlating with the 15 and the 30, and you have rising ADXs, negative MACDs, big selling pressure, you short the first bounce on the 15. Look what it did. It absolutely got slaughtered. Absolute got slaughtered. If you look at MSTR, okay, MSTR, you can see coming into today, right, was negative on the 15, the 30, and the hourly. Look at the negative MACDs here. Okay, today MSTR reversed to sell at 9:45. The same pattern, 11:45, 12 o'clock. You can see MSTR hit the 259 level, 258, and you can see what MSTR. So MSTR and Coinbase identical. In this example, MSTR reversed to sell on the 15 and it correlated with the 30 and the 60, whereas Coinbase reversed to sell on the 15, it correlated with the 30, then the 60-minute time frame came in and boom, everything was a major short there, monster short there, unbelievable patterns. Again, everything I do is based upon combination methodology, but these patterns repeat themselves, and if you could really just learn from me and just sit back and see how these markets react. But when you see patterns like that on MSTR and you see these rising ADXs, now when the ADXs are rising like this on the 15-minute time frame right here, you can see then what you want to do. You can you can then resort to the smaller time frames right here. So after the push down and the initial push down here, they got the 15-minute time frame to reverse to sell. You can see the push up here into the negative MACD. Well, the oscillator was oversold, but look at the ADX rising, and you can see 266 never look back. Never look back. Even on this push up, 272 never look back here. And then you can just see even the next drop, it dropped 14, 13 and a half, 14. But then when you get the first bounce here on the 5-minute, here's one bounce, here's two bounce, here's three bounces, right? Never look back. Never look back. Here's four, okay? Here's five. So here's potentially six, all right? All right. So basically, once the 15-minute time frame, you get anywhere between 1 to 2, maybe 3 trades off the 15. Today you only got one because it went straight down, but that one at 11:45 was an absolute killer, right? But then you take the 5-minute time frames, which will get anywhere between 4 to 6 great trades a day. These are absolute Picassos, absolute Picassos. Let me show you Microsoft today. So if you look at Microsoft today, you can see on the 30-minute time frame right here, it reversed to sell at 10 o'clock. Look at the rising ADX. Look at the 15-minute time frame of Microsoft. Look at this. At 12:30, Microsoft hit the 382 level, and you can see Microsoft just got absolutely kabooshed. Never even looked back. Got all the way down as low as 377, dropped a total of about 4.5, 5. So again, one of the most powerful strategies are when the 30-minute time frame reverses to sell and it correlates with the 15 and the 30. You look to take the short first bounce on the 5-minute, but then the second bounces off the 15, and a phenomenal pattern there. Let me look at PLTR here. At the end of the day, PLTR rallied pretty sharply, and it's up right now about the same. But if you look at PLTR on the 5-minute time frame, you can see that PLTR pushed down to 74.57 right here at 305. It never looked back. The MACDs could not confirm the low. The MACDs could not confirm the low right here. And you got really big buy divergence here. And that's why, right here. So if you're trading the market and you see this here, all right, you can see that the MACDs with a deep oversold condition, PLTR never looked back. All right. Bitcoin, I got to show you this Bitcoin. All right. So Bitcoin, let me bring up the 15 and the 30-minute time. When Bitcoin reversed to sell on the 30-minute time frame, right? This is an absolute, I told you that when the 30-minute time frame reverses and it correlates with the 15 and then the 60-minute time frame, this by far is one of my favorite strategies. The MACDs are negative on the 15 to 30 on the 60-minute. When the 30-minute time frame reverses the sell, it correlates with the 60 and it correlates with the 15. You look to short the first bounce on the 15-minute time frame, and let me show you. The person who bought 81,000 on Bitcoin, he jumped, right? Look at this right here, 81,100. Where are you going? The 30 correlated with the 15. It correlated with the 60. Overbought into the negative MACD on the 15, the 30, and the 60-minute time frame. Overbought into the rising ADX on the 30. Overbought into the big selling pressure. You got to be kidding me. When Bitcoin was trading above 81,000 at 11:45, the oscillator was into the 85.90 range. So this here is a monster short pattern. Monster short pattern. And so basically what you're looking at here overall, okay, is that when you see this pattern, okay, you're going to be able to recognize by just upon visualization and repetition that the 30-minute time frame reversed. You got the push up on the 5-minute. You could take in a couple of shorts off the 5 after the market open, but ultimately this is where you're going with this overbought into the negative MACD, right near to the 10-bar weighted moving average. One last one. Let me show you Apple, which got absolutely kabooshed today at one point. So Apple, you can see Apple reversing to sell right here at 9:45 on the 15, then the 30, and then look at Apple. You get the great short here in Apple at the end of the day, right here around the 226.90, 226.80, and you can see the drop of about almost $2.40. But overall, I'll show you the really great pattern in Apple on the 5-minute. This is an absolute Picasso. When you see something like this right here, okay, and you see a negative MACD on the 15, look at the width of this, a rising ADX, monster selling pressure right here. You're looking at a negative 30. You got a negative 41.11 and a positive 10.86. You're a negative 38.39. Big selling pressure. The 5-minute time frame gets overbought. This is the first bounce on the 5-minute after the 15s reverse to sell with the 30. What does Apple do? 227.29 and gets absolutely cabooshed here, almost $3. These patterns repeat themselves over and over again, and this is what I teach each and every day here. All right, when I come back, I will tell you what I expect for tomorrow. Okay, so I expect more of the same volatility. I think we're probably going to get some type of a bounce tomorrow. If we do get some type of a drop tomorrow, I think it might be short-lived. And if we do make new lows, I'd be looking to buy them. Right now, like I said, we're about 280 points away from the 10-bar moving average on the S&Ps on the daily. That's pretty significant. The standard deviation is 50. So I am expecting a rally in the next 1 to 3 days here. Again, that weekly is most likely, unless the S&Ps can rally 135, 140 points between now and Friday. It could happen. That weekly is still looks like it may reverse to sell, and that would violate the uptrend since September 17th of 2023. So then you'll have the daily and the weekly negative. That means we're in for some trouble here before the market, has any good news. You're probably anywhere from 3 to 5, 6 months, maybe 7 months before the market uptrend can resume here. Right now, the market's skittish based upon recession fears, slowing economy, and again, that's going to affect corporate earnings, and it's going to affect a lot of things here. So, and the fact that the President Trump is thinking potentially we're going to have some hiccups here along the way, and he's not worried about it because in the end, we're going to come out of this strong. And I kind of agree with him on that. So it's a short-term, a little rocky road here. So what I'm expecting tomorrow is if we get pullbacks here on names like NVIDIA, okay, I'm looking for an intermediate term trade here. When I say intermediate term, I'm talking like maybe anywhere from 2 to 7, 8 days here. All right. I think Tesla is sold out here. I think AMD is almost sold out here. Not NVIDIA yet. Okay. Meta. If Meta can, I think Meta can get down to the 565, 570 level. Then I think you can get a sharp bounce there. Microsoft down 11. If Microsoft it goes any lower between the 372 and 375, I'd be looking to buy that. All right. I don't know if again, the market always does things that you don't expect, meaning I'm looking potentially for a push down tomorrow. The market probably be up 50 handles tomorrow on the opening. Okay. What else? Apple, I'm not a fan of here. NVIDIA, I'm not a fan of here. The spiders, and I like the ETFs, the spiders and the Qs. So if we do get any push up tomorrow and you get these big buy reversals here, just to give you an example, I need the S&Ps to rally minimum 25.6651. Okay. I'm sorry, 56.51, just to get the 15-minute time frame to reverse the buy. 565.36. That means I need the S&Ps to rally up to 66, 40 points higher. Just get a buy reversal on the 30-minute. Now, what I'm seeing here is the 30-minute and the 60-minute time frames, the 30 reverse to sell. So if we do get a push up and we get an overbought condition, this will be the first bounce on the 30-minute time frame since it reversed to sell. Then I am going to do what? I'm going to look to short the first bounce. Okay. Then I think we go down. Then I think that next push down in the next 1 to 2 days could be a short-term bottom for some type of an intermediate term rally. So I'll show you what I mean. So if you look here on the spiders, you can see the 30-minute time frame reversed to sell today right here. Again, one of my favorite patterns. This is the bounce I was telling you about, 11:45 and 12. This is the big number here, 565.37. You can see we're 40 points. So that means the S&Ps have to trade 56.67. That's $4 higher in order to get a buy reversal. But if we do get a push up tomorrow and you get a little bit overbought and you're into these negative MACDs here, you may form one more bear flag and then a monster push down here. Boom. Okay. And then I think once you get an oversold condition like this one more time, then I think that's when I'm going to expect a rally. So if we do get a push up tomorrow, I'm going to look to short them off the 30-minute time frame. If we do get another leg down, I would only wait to buy them if we got deep oversold conditions on the 30 and on the 60-minute time frame. All right, what else? Let's see here. Again, Coinbase, MSTR, big rising ADXs on the 30 and the 60-minute time frames. These stocks, I think there's a lot of risk here. I think Coinbase can probably get down to the maybe 158, 163 level before I would start nibbling on it for a long. Again, these trades will only be short-lived because, when I don't believe we're in a bear market, even though we're down for the year. I just think that basically what's going to happen here is that we're just going to, because the monthly is still bullish. The monthly is still bullish. And the big number on the monthly on the spiders is 537. That means 5370 on the S&Ps. So we're not there yet. We're still about 260 points away from that on the S&P. However, again, to recap, if we do get a push up tomorrow and it's a violent one, if I would look to short against the 30-minute time frame. If the 30-minute time frames reverse to buy tomorrow, and we do get a push up above the 56, 67, 68, and the 30-minute time frame on the spiders reverse, then I would be looking to buy the first pullback on the 15-minute time frame. If we do get a push down tomorrow and the market starts making new lows than today, I would look to buy the pullback. I would look to get the deep oversold condition on the 30 and 60-minute time frame. So again, scenario A, we get a push up, the 30 minutes get overbought. I probably look to fade that. If they turn positive, then I would look to buy the first pullback on the 15. If we just open gap down lower and we get deep oversold conditions on the 30 and the 60-minute time frame, I mean single digit, like below 10, then I'd be looking to buy them. All right. When I come back, I got to tell you something that is really important in the style of trading that we do. So please pay attention. I can't wait to tell you when I get back. Okay, so when you have volatile markets like this, I talk to so many people around the world. What's really important when you're scaling in and scaling out of trades, which I'll cover probably tomorrow, which is I think is the icing on the cake in being able to trade the markets. What's really important is just based upon my research and my style of trading, when the S&Ps were dropping before, I was scaling into a position based upon a pattern, right? What a lot of people I find are doing are what I call single lot entries, meaning they're just buying at one price. So let's just say, I'll give you an example. If I call a range on the S&Ps, look to buy 557 to 558, maybe they're buying at 557.80, and when it drops down to 557.20, 557.10, because the markets are volatile, they're not buying another lot. Again, it's your money. You do what you want. I'm not allowed to tell you what to do. But I do believe that you should enter, based upon my research, 3, maybe 4 entries. So if you're looking to do 1,000 shares or whatever, 1,000 shares or 500 shares, you position the trade, you put your orders in. I like to do what's called pyramiding. You start off with a lot here, you double it here, then you double it again. So if you bought, for example, and I'll go over this tomorrow in scaling in, but again, if you're buying in a range and you're buying the spiders at 557.80, and I'm calling a range 557 to 558, and you're buying at one lot or on an option or a stock, or you're buying some shares at 557.80, and then you drops down to 557.40 or 557.20. Now you have your stop in place, of course, at 556.40. However, and then you're not buying more on the way down, and this you have to wait now for it to rally back up and then some. Granted, in some of these markets where you're moving 20, 30 points on the S&P at any given time, that's not a problem. But single lot entries, in my opinion, do not work, because you need to be able to scale in and scale out of a position, which I will cover tomorrow. So again, try to look at the pattern, identify it with me when I'm streaming, and I'm able to guide you and educate you on the pattern. And I'm saying, I would look to buy in this range here to be able to do a single lot entry, whether you're trading futures, options, or a stock. Really, really kind of in a way hurts you. So try to open up your horizon. Even if paper trade it, try to scale into a position. Now, there's a difference between, as I told you in the previous podcast, there's a big difference between scaling in and averaging down. Scaling in, you have a stop in place. Averaging down, you just keep buying all the way down with no stop in place. Completely reckless. Big difference, night and day. So single lot entries, try to open your horizon and scaling into the position, all right? And whether it's long and or short, so that will help you, in my opinion, in these type of markets. I'm Stephen Kalayjian. Thank you for joining me here on The Bull, the Bear, and the Ugly. Please subscribe to my YouTube channel. Also, follow me on X at Steve Kalayjian. Join my community. My phone number is 914-500-7484. Please text me if you have any questions. God bless you, and God bless the United States of America. Be well, everybody.
Thanks for tuning into The Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. If you enjoyed today's episode, be sure to subscribe on YouTube at Trade EZ or on your favorite podcast platform. We'd love for you to rate, review, and join our community for more real talk and market insights. Until next time, keep trading and stay sharp.